Right, guys, thought I'd do a little bit of an update. I'm just waiting for a meeting. I've had a ridiculous week this week, a lot of driving. Um, but yeah, I want to talk about the where we are with the stocks and share stuff. And we're now over £1,000 invested, and I've spread it out a bit. There's we've got a few stocks that were gifted because they have a affiliate type program. Sometimes if you guys sign up, I get some shares, you get some shares. So they do that now and again. So there's a couple of those in there, and funny enough, they're the ones not performing very well, the free shares. Um, but I'm keeping them in there based on the fact they were free, and I'm working on a strategy of not selling. Not selling. We're investing. We're not speculating. Um, Now, one of the things I want to make clear is I'm not a financial advisor. I'm pretty good with money, but at the same time, your money, you do what you want. Do not come whinging at me that you made bad decisions. You make your own decisions. But this morning, I've started adding some of the pie charts so that other people can copy my pie charts. Um, have a look if you're interested or not. But I've split it out. You know what I was saying about doing the meds, the pharmaceutical stuff with various companies. So you've got Eli Lilly, Pfizer, and about three or four other smaller firms. Oh, and AstraZeneca's in there as well. I've done a large portion for Eli Lilly because it's got good growth on it. Pfizer is trying to develop into like the weight market and stuff like that. So it's not as big because it's speculative. The other bits and pieces are all working on stuff and may suddenly jump. AstraZeneca, I do want to invest more in, but that's my personal choices. Um, so there's a pie chart with those guys on there. There's another one which is my dividends, which is broken down as well. So the idea being is if you open a 212 account, if you decide to do that, you can actually look for my account, find the pie charts I'm using, and literally copy them if you want to do that. So I'm doing that for you guys because there's no advantage of me sharing it because if any of them tank, you're going to, I bought it, it's your pie chart, it's your fault. But I have to admit, I am quite selective on what I'm doing. I'm spending a lot of time researching, checking what I'm investing in. I have limited exposure in things like arms, simply because arms and security change with the politics. I can't be bothered with it. Don't get me wrong, I know there's money in it, but it's a volatile piece. It's a market that is based on government contracts. So quite simply, I don't need it. Now there's another fund in there, which is Alliance and Leicester. Is it Alliance? No, it can't be Alliance and Leicester. That threw me off there because Alliance and Leicester used to be my old bank. It was bought out by Santander, and then let's not get into that. They tried to charge me for an account by changing my contract without telling me they changed the contract. But anyway, it's legal in general. Legal in general, there's a fund there which is set up for AI investments, and I've opened and put nearly £100 in that one as a starter fund. One of the things you'll notice over time is I'll share what I'm doing, but you'll see the top ones are my biggest investments, and then you'll see the smaller ones, or probably not even see some of the smaller ones because they're only like £10 or whatever in the bottom. Because one of the things I'm doing is I'm putting some money in stocks as a page marker. So I'll put a small amount in so it goes on my list. So like I'll throw £10 in there just because I want to keep an eye on it. I know it's an expensive way to do page markers, but I'm not picking duds anyway. I'm looking at the long-term investments. One of the things I've noticed with Kimberly-Clark, for example, it seems to although it declares dividends, it doesn't seem to be growing. So it is fairly limited on where that company is going to go, from what I'm seeing at the minute. But it's Kimberly Clark. Some of these companies are like that, in the sense of what's the next thing they're doing, because obviously if they've got a market, it may be just it's churning the same stuff over and over again. So it's stable, but limited growth, and it's been limited growth I think 3 years, which is a bit weird because we seem to be having a shift in population dynamics around the globe. So you would expect to have natural growth, but we'll see. What else have I got in there? So yeah, AI I've opened up in. My dividends ones seem to be performing, although I was expecting some dividends already, so maybe I'm not seeing something yet for some reason. I've got to look at the dividends and work out how that actually works. Is it a case I'm reinvesting it so it's not showing it as a profit because it's already get reinvested? I'll have to have a look. Why is it already at 1,000 in the space of, is that less than 4 weeks? The answer to that is quite simply, this is the same reason I put €30 in my wife's fund to see if she took an interest, and she's watching it daily now. So I put another 30 in there yesterday so she'll start developing her own strategies and stuff. And I've kept it simple as well, so that she's more focused on funds than investments. So for example, she'll invest in Vanguard, but the Vanguard are managing the funds. So they're doing the investing for you. So that's what you'll see when you look in there. You'll see loads of Vanguard ones. Or I think iShares is another one. And I said Legal in General have got specific ones as well. But the point being is they're managed accounts. So they'll have in their investments. So you're investing with them. They then do the investments for you, which takes some of the... yeah, it does take some of the risk out. To put it in perspective, my Vanguard fund with Vanguard, which is a separate account, when we had the volatility with Trump and the tariffs, they actually sent me an email saying they're stopping trading till it's a bit more stable. So the fact is, they're managing it for you, because sometimes you may have to make those decisions yourself. I'm committing on the other way around of buy decent stock, and that's it. It's not for sale. In for a penny, in for a pound. So the investment in it is for the long term. That's the point. So I don't half bake it. I look at where things are going. That's why things like Moderna is one of my free shares. But I don't know if they're ever going to produce anything there. It seems like theirs was all in on COVID, so I'm not sure if they're going to actually produce anything else of value. Maybe completely wrong. So I'll leave my money in there, my free money. But what I've tried to do is pick stocks where I can see some growth. So for example, you look at Eli Lilly and look at its growth. Its dividends is low, but its growth is massive. So when you look at some of these pie charts, you'll see some of the pie charts seem to have a yield of annual growth of about 7-8%. Some are 20% because it's to do with the risks. Now, as you heard probably in my first video, I mentioned about I'm looking at 10% and above. That's on average. So the point is, as I invest and take on riskier ones, I invest in more stable ones at the same time. It's to balance that risk out. But I fully understand. Not everybody understands this stuff. Not everybody's interested in investing. That's fine. But the concept of this is, if you want to get into it and are worried about making mistakes, look at funds, ETF funds. Look at people like iShares. Look at iShares, Vanguard, Legal in General. And that, don't look at legally, literally legal in general investments, because I've got those as well. Look for the funds they manage, because they're doing more. There's more than one legal in general account. Same with Vanguard. There's at least 6 different ones, because you'll have like UK investments with the UK stock exchange. You'll have North America. You'll have Asia, not including Japan. And that's just a few of them. And then you start getting to stocks v bonds. So some of them are bonds accounts as well, which are government bonds. So they're a bit more secure. But at the same time, there's some weird stuff going on, especially in the UK, about 2030. So bear that in mind. And I say 2030, simply it gives you UK gilt 2030. And Google that and you can get a bit of information about what's going on there. But the whole concept of this is I want to try and encourage people to do investing, try to understand it a bit better, because there is more money out there than you're getting with your bank. And I'll do another story on that after this. I'll explain a couple of things that I learned over the years. But anyway, guys, thanks for watching, and I'll walk you through my investments and bore you to tears over the weekend. Thanks.